Well, hello, everyone. Welcome, welcome. It's so great to see so many familiar faces, and I love that you've got lots of you have your cameras on, and so that's fantastic. Doug and Michael, and a couple special welcomes to some brand new members. So TJ and Allie, it's Darren. Amazing to have you here. So welcome, welcome. We have a big Market Leaders Lab today, so I'm very excited. Just to get this started because we've got some very special guests. So before we get into introducing them, I am going to share you a little bit about what the Real Estate Wealth Lab is and what we have to offer so that all of you wonderful individuals tuning in here and tuning in from LinkedIn and Instagram and all these amazing places that this is being broadcasted right now, that you'll be able to learn more about the Real Estate Wealth Lab, as well as our special guests as we get into it today. So one moment, and I'm going to share my screen, and we are going to be off to the races. So ladies and gentlemen, I welcome everyone. I know that there's folks who are tuning in from across Canada and the US, and even in Mexico. Catherine, Copeland, great to see you. I know that there's a great breadth of us here, so this is fantastic always to have you. So when it comes to our today's event, which is our Market Leaders event, we have very special guests, Ava and August. Said ladies first, Ava and August, from Cpi Capital. And we'll be doing a proper introduction in just a moment. I'm going to take you through what is the Real Estate Wealth Lab anyway. So this is about taking your portfolio to the next level. No matter what stage you're at, whether you're just starting out, whether you're scaling, or whether you're succeeding and wanting to exit, we've got the pathways for you. So we have research, we have data, we have analysis, and a lot of it, I may add, and we combine this with artificial intelligence and these amazing formulas. It's a proprietary analysis formula that brings it all together with your personalized pathway of where you are, your desires, your outcomes, everything that you're looking for from now and into the future. And our team, we've got a big team, and these are just a few of the folks who are front facing. And of course, we've got to have those who are way behind us, and not behind us, but with us, who aren't even on this, and huge team in support of really bringing you the best information that you need and the support that you need in order to take your real estate portfolio to whatever level next. So just, I won't introduce everyone here, but we've got a few of us. So I saw Naran in here. Naran is our Chief Leadership Officer. Give a little wave. And we've got Rob Ayakata. He's down there, real estate strategist. And Paige is our head of customer service. Ken, I know, can't make it. Richard, well, he's actually listening. So he's just behind the scenes there. Richard also. And we've got Jan, who's our Chief Marketing Officer. And I see a smiley face there of Vincent, our Chief Technology Officer, and bringing you all kinds of different products that Real Estate Wealth Lab offers. So you can follow us on Instagram. Here's our handles. We've all got something different to say. So if you're following me, I'll be talking more about typically market analysis and what's going on politically and economically. And if you're looking at what's going on in the IT world and how it relates to real estate, then Vincent's your man, and marketing, of course, for Yan. And so you'll want to check us all out. Now with REWL, you get a whole bunch of different things: weekly reports, expert commentary, regular digital events just like this one and more, and also getting into city-specific analysis. Now, I know a lot of you have been asking for more market analysis, and I have some special news for you in just a moment. But we have created our brand new report. I don't know if I'm allowed to tell everybody that, hey, Yan, yet, but anyway, so we have a brand new market analysis report coming soon, masterminds and macro market trends as well. So there's a lot when it comes to our products and our portal as well. So in their actual member portal, there's a real estate intelligence newsletter. Now this is a little bit different. This newsletter takes all the headlines and all of the studies that are out there and truly unpacks them with actual commentary and what it means to you with a specific buy, hold, or even sell signal. And then we do provide market analysis. So we've done some across North America. We are US and Canada focused, and even globally focused. And actually at our next event, Research Lab on April 27th, you will want to attend that, how to invest in real estate globally. Yeah. We've got calculators and video presentations in the library, and these are just a couple of samples of our calculators. How to Airbnb, and if it works, fast filtering, you name it. I'm just gonna go through these. There are so many calculators, and this is just the tip of the iceberg. Oh, Michelle, it's the best newsletter. You're so sweet. And Tammy from the Okanagan. Well, that newsletter indeed is very sassy. So, and filled with no BS, let's put it that way. And so please come and hang out with us. Save the dates. You can come hang out with us basically on every Wednesday of the month, the 2nd, the 3rd, and the 4th. We host events of some form, and I'll show you what those are. So today we have, as I mentioned, our special guests with market leaders. These are individuals who are crushing it in their field as it pertains to real estate. So I'm delighted to have our guests today. Then we have a community lab where we get to actually interface with one another. And sometimes our market leaders are kind enough to come and join us at our community labs. Hint, hint. So we may be having Ava and August, not maybe, we will be having them next week also, so that you can pepper them with questions and getting right into real specific questions and have them answering anything that you need. So thank you in advance, Ava and August, for coming next week to our community lab. So, and then our research lab is the 4th Wednesday of the month, and mark that in your calendars if you're interested about being in the global real estate market and what that needs to look like. We've got you covered. We're actually doing a very special report that particular day. So we've also got a free trial going on for a limited period of time. So you can join up right now and test us out for 30 days. You get to experience all we have to offer as a REWL member. So we also have a REWL ambassador, and that is where when you join, you can get your own link and you can share that with your friends and get a 10% per referral towards your any rebate basically for real estate wealth product services. And that includes coaching and that type of thing as well. So without further ado, I'm just going to play this quick little video, and one moment, I'm going to stop my sharing because I don't think it's going to work. Ha ha ha. There we are. Going to try again. And hopefully this. Who's excited? We're excited. We have so much more. I just went through what we have currently. We are coming out with a whole new suite of information, actual deals and membership levels for you coming up soon. So you'll want to definitely check out our free trial and get started with us right away. And this is how you can get a hold of us. And Paige was kind enough just to pop that free trial in there. So that's fantastic. And now, we are almost going to get into this. So I'm going to actually introduce August and Ava, then I'm going to have them introduce themselves, and then I'm going to do a little bit of housekeeping so that we're all on the same page, okay, in terms of legal disclaimer and stuff like that. And then we're going to get into our Q&A. Cool or cool? Cool. Okay, awesome. So everyone, I'm delighted to have with us today Ava Beniskaki and August Binias from Cpi Capital. They are absolutely crushing it in the real estate private equity space. And you guys have only been around in this space for a couple of years, I think, too. So really, really rising stars. And we have them here today. And the list of accolades goes so long. Ava, for example, is award winning in many, many awards recently, as well as an author of a book. And August, I understand that you do pretty well yourself, but I'll let you speak of your special awards if you like. And please give us just give us a little introduction about yourselves.
Fantastic. Well, first of all, we just want to say how excited we are to be here. And it's such an honor being a guest of yours on the Real Estate Wealth Lab. So thank you so much for having us. I'm Ava Benisaki, everybody. I'm CEO of Cpi Capital. And Cpi Capital's mandate is to acquire value-add multifamily assets across the Sunbelt states in the US. While partnering with passive investors as our limited partners. I'm also the host of a YouTube show. August is the co-host, and it's called Real Estate Private Equity Academy. And essentially we interviewed 2 guest expert speakers every single week, and we talk all about real estate investing, wealth building, and real estate private equity. And it brings a lot of value to our community. So it's really fun. So I please tune into that. I co-authored a book, From Ordinary to Extraordinary, with an amazing women across Canada, where we kind of tell all about our story about how we found success through real estate investing. And that's just a little bit about me. So I'll pass the mic to August over here.
Absolutely. How do I keep up with that?
Okay.
I'm August, and I just hang out and just make sure the mic is working fine. August Biniaz, co-founder of Cpi Capital. I act as the CSO and CEO of Cpi Capital. Cpi Capital is a real estate private equity firm with a focus on U.S. multifamily while partnering with Canadian and U.S. investors. My background has been in real estate, construction, development locally here in Vancouver. But since 2 years ago, I've been a partner with Ava and other partners to co-found Cpi Capital. We co-host a YouTube show. Love adding value and providing knowledge to others involved in the space, just for them to realize there are many options within the real estate ecosystem to be able to invest and grow, either as active or passive investor. So it's an honor and pleasure to be here today, especially with this superstar platform and a superstar leader like Jennifer. I've been watching her for many years at live events when she was speaking, kind of looking up to her. Wow, who is this powerful woman talking at these events? So I'm honored to be here and be speaking on her platform.
Yeah, and we hope to add tons of value today.
Well, thank you very much, Ava and August. I really appreciate that. And I know that you will. And we've got lots of questions for you today. So thank you very much. I'm just going to go through a quick little bit of housekeeping, just in terms of all of the disclaimers that one needs to comment. I doubt that we're going to be getting into the real nitty gritty today, but we might, because we're going to save that a lot of the nitty gritty numbers for the community lab next week. But you never know. So in terms of a disclaimer, we want to make sure that we've covered the bases. Basically, do your diligence. Yeah, okay. This is being recorded. This is being recorded live. So just as a heads up, now you've been officially notified and it will be available to you. We are recording it as well. So as a member, you have access to it for the rest of your time here. So we would love for you to check it out in case you missed something. You might want to do so. And then just in terms of the chat rules, I know you guys are all amazing. You've heard this many times, but do ask questions. We pay attention and we'll try and work them in as much as we can. Say hi, engage, share your feedback. What's really resonating with you? What is not? What's confusing? Do we need to stop and ask for clarifications? Because there's some really cool topics that we're going to be covering. And then just, of course, being respectful, being courteous, and being kind. And then I should say, don't sell, please, and don't solicit at this juncture. And so then you can invest. We actually have what we're launching soon. Remember I said that video of more to come, more deals. And so we are launching a property shop coming soon. Yes, where, yeah, I know. I hope I'm not stealing everyone's thunder, but I'm so excited because one of the challenges that we have is, as real estate investors, is getting good deals. And so we'll be able to have deals going back and forth amongst members. And I know Ava and August, for example, your deals, how to even get access to those. And in order to invest in CPI deals today, Paige will pop this in the chat, you can go through this particular link, and they have so generously offered to receive an ebook of 25 fundamental questions to ask when vetting a private equity firm. So if you go to that link right now, you're going to get an ebook of 25 questions. Now, I want you to be listening to this from two different ways. One is, okay, let's say you're just starting out in real estate or you're wanting to get out of real estate. You don't want to necessarily start a private equity firm yourself. That's a don't do it yourself conversation. So you're going to want to get this ebook and listen to us today from the perspective of, okay, how do I vet a real estate private equity firm? What are the questions I need to be asking? Who are these people and how do I build trust with them? Or how do I get them to build trust with me? Then on the flip side, if you're scaling your business, and I know there's a lot of you out here for sure that are scaling your business and you're chomping at the bit to create your own real estate private equity, well, guess what? We're going to talk about how to do that today as well. So you're going to want to definitely pay attention from that perspective as well. So I'm going to stop sharing my screen. And is everyone here? We're good? Perfect. Okay. Excellent. And let's get into some of these questions. So I'd love for you, Ava and August, to just get us started with what is CPI and tell us, I know you mentioned the mission, but get us, what is it? And maybe even step back is what is a real estate private equity firm to begin with? Let's get all in the same conversation.
Awesome. Let's get into it.
Absolutely. Yeah. To kind of describe what a real estate private equity firm is, let's describe what private equity is. So private equity, the name's kind of on it, private equity. So private compared to what? Public. What is public? So public is whenever you utilize the public markets to either raise capital or to go public. That's the process that companies use to raise capital. They go public, raise capital, and grow and what have you. In the private market, companies raise private capital to then deploy it, either buy companies, make them perform better, or make other types of investments. So essentially, broadly speaking, that's what private equity is. Now, when you talk about real estate private equity, essentially real estate private equity is a real estate investment firm that raises private capital and then deploys it and acquires real estate assets. And private capital, for example, means from retail investors, everyday individuals, or institutional investors. And some examples of institutional investors are university endowments, funds, pension funds, and other institutions. So they raise private capital and buy assets. So that's essentially what a real estate private equity firm is. In relation to CPI Capital, like we mentioned earlier, is an investment firm that raises private capital from both retail and institutional investors, and we do have both of those investors, obviously. Obviously on the retail side, but on the institutional side is more difficult for a newer firm to have so. And then we buy US multifamily.
Yeah, so essentially what we do, CPI Capital vets the best real estate investment opportunities, and we kind of bring them on a platter to our investor community. So we have investors in Canada and the US, but essentially we're diversified throughout the Sunbelt states. And what we've done is we've created a really streamlined investment process for busy professionals and actually retired people. And we do have kind of a wide demographic of people who invest with us. But essentially they have access kind of by the click of a button. We've streamlined it so much through our investor portal where they can literally show up, do their due diligence, and then invest in these incredible institutional size multifamily assets. When I say institutional, we're talking 100+ doors worth multi-millions of dollars.
A lot of information, Ava. Let Jennifer get it. There's too much information. Too much information. I can't help myself.
This is why we get along so well. We're all so passionate, and I love it. You know what you said about bringing, like you had me at hello with on a silver platter. I don't know if you said silver, but on a platter. So let's assume it's a silver platter. Here they are. Here's the deals that work really well. And then you also mentioned in terms of Sunbelt, and we've been talking about at Real Estate Wealth Lab the importance and the growth of the Sunbelt. So you're in terms of the U.S. and the market. We'll talk about that in a little bit, but you're already where we're in the same places that we're saying that it's going to be growing. And so this is really good for protecting your assets and protecting your investment. So that's very cool. So what inspired you to start CPI?
You know what? we talk about this all the time. Every great business that's formed is actually started from a problem that exists. What we did was we seen a problem that existed, people wanting to invest in real estate, but not, 90% of the world's millionaires made their fortunes by investing through real estate. So we all know it's not a secret that real estate investing is, of course, you got to have it in your portfolio some way, somehow. But a lot of busy professionals, my background being in real estate for over a decade, a lot of people don't know where to begin. They don't have the time. They don't have the expertise, the knowledge. So essentially they never end up making it happen. So we kind of seen that problem that existed, and we wanted to bring a passive investment for investors to get access to.
Well, just for me to add a bit to that, it wasn't only allowing people to passively invest in real estate. As many of you know, there's options like REITs and funds and what have you. We wanted to be able to bring these institutional multifamily assets to everyday individuals to be able to invest, because as you know, these large institutional assets, like Ava mentioned it earlier, the reason they're called institutional assets is because institutions invest in them historically. But this concept of syndication or real estate private equity allows for a management team to source and find these deals, put them under contract, bring them to their community of investors, raise capital, and then get the partnership together and buy that asset together, and then share the profits. And even within, that's great alignment that exists within that partnership as well.
And Jennifer, just to say one more thing, because I love to talk a lot. Real estate investors look for two main components: cash flow and appreciation, and that's what our investments provide. Okay, so I just wanted to also throw that in there.
Perfect. Absolutely. And I love that, solving a problem, and being able to, one of the values that I really appreciate about the real estate and the projects that I've been working on as well is very similarly in terms of there's a problem, individuals who aren't the big wigs necessarily, or the billionaires, or the, institutional investors. And how do you create these opportunities for players who want to play, but it's just a lot of work. And so that's why we're going to go down these two paths today, and they're going to intertwine and whatnot, of do it yourself or don't do it yourself. And either way, this is a fantastic conversation for us to have. So thank you for that, of solving problems. Okay, so we're going to put on the hat of, let's say, don't do it yourself. So, Vincent, yes, okay, sure. Vincent's asking for you folks to tell a little bit more about the team behind CPI Capital before we truck on into some of the nitty gritty. So go ahead.
Absolutely. I would say if you look at the real estate private equity business and a real estate investment firm, look at that investment firm, look at that business as a pie. That pie gets divided into three main pieces, three main components. One is the equity piece, a consistent need of capital to acquire assets. And I'm not talking about debt, I'm talking about equity. Mm-hmm. One piece is the acquisition, is the deal, is the asset. So it's finding the asset, doing the underwriting, creating the pro formas, doing the physical due diligence. And then you got the value add, the asset management, is managing the property, doing any kind of renovations or updates that are needed. So those are the three main components. And within those components, those are the team leaders you need. You need a team leader that is going to be looking after your investor relations. You're going to need a team leader that's going to be scouting deals for you and underwriting them. And then you need your team that's going to be on the operational side, asset managing the asset. And those are. And
we are going to talk, we're going to get into really, we're going to zone in on that on next week's presentation.
Oh, good.
How to build a power team.
That is
private equity firm.
Awesome, because that is so important. And the way you describe it, of the pie and where your strengths are and where your weaknesses are, and how you can kind of mix and match and make it the best fit for you, whether you're vetting a real estate private equity firm, or if you're wanting to create one. Where do you fit in this pie of all of the major players that you need on your team? And I think that this is one of the, we were talking earlier, folks. So one of the things that I loved about that part of the conversation is that we don't all need to be all hats at one time. And in fact, it's really not going to be supportive to you in your real estate business when you're playing this kind of a big game. Is that correct?
Absolutely. Yeah. It's a team sport. You got to figure out what you thrive at and focus on that, and let somebody else take care of the next task at hand.
Get the right people on the bus.
Yeah. It's all about the people.
That's right. And a very nice bus. All right. So what are your key elements of diligence? You mentioned earlier that you look at sort of institutional in terms of greater than 100 door multifamily in the Sun Belt, and where there's value add. So expand on that a little bit, please.
Yeah,
I think
absolutely.
it first starts from the region. That's a very important component for us, and that's kind of data is extremely important. The services you provide, and that's why we love data. So we start with a region, and the regions we look at are obviously the Sun Belt. Sun Belt is because of the political reasons. Sun Belt states are usually red states. They're very business friendly, very landlord friendly. There are no real rent control laws in place in the Sun Belt states. Also, they've shown certain growth metrics such as population growth, job growth, rent growth.
Key performance indicators.
Exactly.
That we follow very, very closely.
Income growth. And so as long as a region shows those consistent growth metrics, that's an area you want to invest in.
Especially in the last 3 years, it's a recipe for success.
So it starts with a region, and then goes on to the asset class and the business model. So the asset class that we're focused on, again, is on that institutional. And the reason why we look at institutional is because the type of investors that can invest in institutional, these are in the tens of millions of dollars. So the field is much more not as competitive as it is in a single family or duplex or a 10 unit building. So it slims the competition. And then also these larger multifamily assets allow usually for a third party property manager to either be there on site or handling property. So economy of scale that brings your management cost much lower, your renovation costs, management costs, and what have you. And as far as also that, I mean, I can go on and on why multifamily is a great asset class to be in. It's been great in the last two economic crises, both in 2008 and the 2019-20 and the COVID that we're still going through.
Everybody needs a place to live.
Absolutely.
Well, maybe I can help you out there, and be careful. You can rein me in if I start geeking out too much too. Okay, this can go. But actually, multifamily assets are so real estate is the most stable asset during turbulent times. Multifamily, the asset type within that asset, is the most of that group in terms of stable during turbulent times. And it's very interesting. I have got the data to show why the actual rents they just don't go up and down. They stay more stable, and then the business model of the actual asset value stays stable. So what happens is you end up just kind of having this, it goes up and down a little bit, but it's absolutely stable. So the data actually supports that comment.
Incredible.
Yeah. So tell us a little bit more about, so you Sun Belt, okay, and your assets. What is your current portfolio like? And what are your expansion plans?
Okay, incredible. So currently we have $208 million of assets under management. We own property in Orlando, Florida, Charleston, South Carolina, and Houston, Texas. And our expansion plans, well, this year we're actually underwriting a couple deals right now. We're really excited because the investors are like, bring us our next deal. We have capital to deploy. But our expansion plans for 2022 is probably to do about 4 to 5 more deals this year. And then we have our 5-year growth and our 10-year growth kind of vision that we're well on our way to.
We're also watching the banks very carefully with the interest rates going up. So we'll have to reanalyze our underwriting process to make sure to have higher exit caps that we currently do, and also the type of loans that we get. We have to be more risk averse in the type of loans we get because with the way interest rates are going up, the rents can't keep going up and the property values can't keep going up. So we have to be cognizant of that. So we're very watchful of this as well.
Yeah, and even before the interest rates went up, even on our last property in Houston, Texas, we set our exit cap rates at a much higher entry cap rate. So we were very conservative with our underwriting when showing investors the types of returns that they're going to achieve and everything else.
100%. And this is interesting. I was presenting on this just this morning about the impact of interest rates on our acquisitions. And there's so many different facets of it. But what I do want to just let other people know right now is that what typically happens is that these interest rates, they'll go up. But when individuals who are doing a really fine job of institutional investing, they typically already have those conservative plays in there. So the interest rate increases don't really affect the cash flow to the extent that it might actually help their business. And hear me out, whereas in individuals who were trying to purchase a home are actually now no longer, and then they're looking for places to live. So it actually feeds the cycle of your client profile. So just something to keep. It's a different way to look at it, but I wanted to add that in there. I see that there's a question here. What do you consider multifamily? Oh, well, let's go and get that question. All right, Bernie, do Ava, August?
Yeah.
It's just how the banks consider it. Anything more than 5 units.
Anything more than 5 units is considered
5 units and up is multifamily.
Yeah.
Yeah, so it's multifamily residential, which is actually technically a commercial property. So it does go through commercial lending, commercial processes. It's vetted very differently. But yeah, exactly. It's more than 5, but Ava and August, so CPI Capital is looking at 100 plus units for that multifamily. All right, so what decision factors would you look at when buying a real estate private equity firm? So if you were to, so you can look at it from a couple different things.
Yes.
How would you like your clients to be looking at you, and what would you want them to be thinking of? Or alternatively, I mean, you can't put all of your money into your own deals and things like this. So if you were looking to invest in someone else's real estate private equity firm, what would you look for?
Well, maybe.
And I know you've got the ebook. I know you've got the ebook.
Pull up
Talk about that.
questions and just go over them one by one. No, I'm just kidding. I mean, yeah. So
we have a lot of incredible questions, you guys. And if you sign up to the link, we do have like 25 like fundamental questions that you have to ask a real estate private equity firm before you go passively investing with them, because you gotta see who you're investing with and ask these questions. But let's touch on
for sure. And just there, it's not just going to be questions. It's also why you should ask those questions. So there's a big description on each question that's asked. But getting into the question of investing into a real estate private equity firm and what to look for, I mean, the question always starts from the investor. What are your goals? It's very important to look at that, right? And when you look at your situation, what are your goals? What is your investment appetite? What is your risk appetite? How much capital you looking to deploy? What is the term of the investment you like to you like to be involved? So those questions then can in a way kind of put into place the firms that exist. So if you want a 5-year exit, if you're looking for cash flow from day one, if you're looking for appreciation, if you're looking for certain type of returns, a ground up development project, which completes in 10 years, might not be the right private equity firm for you to work with. And same thing vice versa. If cash flow is not important, the IRR is not important to you, you just want to leave your money somewhere and you believe in ground up development in an area that is looking to grow, then ground up development private equity is the right product for you. When we started CPI Capital, like Ava was mentioning, we looked at what is the problem we want to solve and what is the demographic we want to serve. And that demographic was the busy professional who wants to invest in real estate, receive cash flow, and also above market returns. Above market meaning the returns that would historically get in the stock market. So something above 6 to 8% per year. So when you're looking at a private equity firm, you want to understand the business model and make sure that business model aligns with your investment thesis. And then you start your vetting process into the firm. You want to look at their track record. I'm going to mention some items that CPI Capital currently doesn't have, which is which every firm has to start at some point. So there are you want to look at their track record. You want to make sure that they have assets under management. You want to make sure that they've never lost investors' money. If they have lost investors' money, you want to understand what the circumstances for that was. You want to understand who is on their leadership team. You want a level of transparency if there's questions answered. You want a level of promptness from a real estate investment firm. You want to also fully understand what the business model and the asset is. So there's a differentiating factor between some real estate private equity firms utilize the fund model. A fund model is where they continuously raise capital and continue to deploy that capital into multiple assets for, depending on if it's an open-end fund or closed-end fund. Or there's a syndication model, the model that we use. So we do a project-specific fund to acquire one asset. That goes back to the investor's appetite. So you have to kind of look at, okay, great. This is the business model you're utilizing. This is the asset you're buying. I want to learn more about the asset. Why are you choosing this region? What is your business model? Are the rents that you're forecasting that you're going to achieve, are those doable? You're saying you're going to turn around 3 units a month. Is this possible? So there's just so much, so many different, like I said, the 25 questions will.
I love it. I was just about to say that, August. I'm like, well, I think everybody needs to get that 25 question booklet, because you listed a ton of them right now. I mean, that was that was just amazing to have all of those kinds of questions. And ladies and gentlemen, that might have seemed a little overwhelming if you're just getting started, or if you're thinking about what are the questions that you need to ask. But also, those are the questions that are going to be asked of you when you go and start your own. So if you're building your own real estate private equity firm, you got to be able to answer those, and answer them very, very, very well and competently, because we're going to rapid fire them at you just like that. So I love it, because everyone's going to be armed with the booklet. So it's fantastic. Well, okay. So let's say we're doing some diligence on you, and what would you recommend that people who are buying, I mean, you just have heard a couple of questions, so, in terms of what would we look at and ask you specifically about diligence in your particular real estate private equity firm. So for example, you don't have much of a track record because you're new, but you've got lots of experience in terms of your portfolio, and you've been in real estate investing for a long time. What other things like skin in the game?
Skin in the game, that's what I was just going to say. I always ask, do you have skin in the game? That's an important question.
And just to define the skin in the game a bit more,
yes,
so when acquiring an asset, there's equity, the down payment, the contingency, the capital expenditure, the renovation costs is the equity needed to purchase the asset. A portion of that, the other portion comes from the bank as the debt. But that equity is 100% of the equity coming from investors. Is the general partner, the managers, the sponsors, the people who are managing and putting the deal together, are they also investing in this deal as well? Do they believe in their deal enough to invest their own money in the deal? Yes, they're putting a lot of work. They're funding the deal. They're funding the investors. They're putting it all together, and they deserve a portion of the profits because of that. But are they also besides that investing their own money into it? So for CPI Capital, for the last 3 deals, CPI Capital and his partners have invested on the general partnership, has invested 10% of the total equity needed for the deals, and that's something we want to continue doing. So
yeah, another great question. Oh, sorry, go ahead. Jennifer.
No, well, actually, just maybe we want to talk a little bit about that structure, the general partnership and limited partnership unit structure, just so that people can get a sense of that. I don't know if that's what you were going to say, Ava, but I think that might be helpful.
I can describe that if you
go ahead,
like.
describe it.
Yeah, so kind of let's start it with to explain the limited partnership structure. Well, I want to start out with a joint venture. So great, either you got some money and you want to partner with a friend or associate of yours who has the experience that to invest in real estate, or you're an investor and you need capital and you want to partner with a friend of yours who has capital. So you guys go into a joint venture. You guys get together, you buy a property, one of you does the renovation and management, and then the other one provides the capital. So now that is a joint venture. You've came together, but both of you have active role within that project. What if you wanted to do a similar type of partnership, but you wanted the manager to have control of the project, and the investors to be silent and be just being allocating capital to the deal? That's when you create the structure of a limited partnership. And a limited partnership is just like I described it, is created by these two groups: the limited partners who are allocating the capital to the deal, and the general partner, who's also, there's multiple terms for the general partner. So there's the general partner, the sponsor, the manager of the deal, or syndicator. That's another term. That's or fund manager. These are all terms that are synonymous. So that is who manages the deal. You got the investors who are limited partners. Now, why are those investors called limited partner, and why is the general partner called general partner? The limited partner, the investors are called limited partners because they have
limited liability.
Limited liability, exactly. What does that limited liability mean? Do they have nothing to lose? Do they have 100% guaranteed? No, their limited liability is on the amount of capital that they've invested into the deal. So if there is issues with litigation, or there's issues with the project going belly up, all of those liabilities are on the general partner, not the limited partner. And this idea of a limited partnership comes from hundreds of years ago, when the Europeans found the the North American lands and with all these treasures, and they wanted to grab ships and sail to North America. So they would go to rich individuals and say, hey, we'll get the ship, we'll get the crew. You just got to put up the money for us to go there and bring the treasures back. If we make it back, you make a lot of money. But if we sink, we all die, but you lose the money you put in. So that's, if you want to compare the idea between a limited partners and general partners. So that's basically what it is. And usually in these cases, the limited partners need to have enough trust within the general partnership to make all the decisions of the project. And that is a very important aspect of this to understand. And that's where the vetting comes in. Before getting into as a limited partner to invest in a deal, you want to fully understand the management team, sponsorship team, syndicator, all of these words very well before making an investment.
I just got to say, I love that you listed all of those words, because as going through this process myself and setting it all up, it absolutely, you know, there is that many names for it. So when you do hear, well, why is somebody calling themselves a sponsor or a general partner? There are actually various reasons for it, but you have to understand what those are. They generally mean the same thing.
Unfortunately, there's even more words to discover. So now you got general partners that partner together. So they're co-syndicator or co-GP. And then you want to know who is ahead of who. So you got the lead GP and you got the subordinate GP. So then you got feeder funds and fund of funds. You got all these different terms. But
awesome. Yeah, exactly. Hey, I just want to quickly, that's fantastic. I want to quickly just acknowledge something here, because people are actually going to the site right now. So it's popped in the chat here, the https://ultravest.com/CPI ? Invite = Real Estate Wealth Lab. And if you go to that, you will get the ebook for the 25 questions to vet a private equity firm. Now, don't worry, you just need to go there and it'll all get sorted out. It might not link up right away or whatever, correct, Ava, August, Paige? But we will get the fact that you went there and it will be emailed to you afterwards, correct?
Correct.
Because already we're getting questions. It's not there. So we want to make sure that you're handled. we got you.
And I promise you.
This is the first step of trust, is making sure that everybody receives what we've promised.
There you go.
Well, and that's also us on the fly, making sure that we're providing the most value possible for all of you out there, because we decided this, 13 seconds before we went live today?
Yes. I can't believe your team actually had it in the title there.
Where did that come from? Wow, that is productivity.
Awesome. Yeah. Okay. Well, thank you so much. So let's move on a little bit to I want you to talk about the promote.
Oh yeah, the carried interest, the promote.
Yes, if you will. So because this is a term that, you know, it's interesting. We have fees when we talk about real, and you mentioned a lot of them, August, just momentarily, in terms of there's the equity and do you have skin in the game and that side of it, but also just for structuring the deal for all the various, you know, acquisitions. I'll let you talk to it. All the various components that are typical. You do get fees that are associated with that. And then there's this component of performance-based fees. So I'll turn it over to you to explain. And by the way, so again, when you're listening from a do-it-yourself hat, if you're wanting to create your own, you need to be aware of these fees, because this is how you're going to get paid. So your business model and your business plan need to include these. And then for those of you who are vetting, of course, you're going to want to know these fees and the percentages and make sure that they're competitive. All right.
I just got to say one thing. So please ask questions, because this does get a bit convoluted. So we're going to take a time to fully explain the fees and the promote associated, the profits that the general partnership makes within this partnership with limited partners to acquire real estate. So please ask questions.
Ask
the biggest disservice that I've ever done in my life has been nodding my head when I didn't understand the concept. So please go ahead and ask.
Yeah, so just on a high level, sponsors get paid, general partners get paid in two different ways. They get paid by fees and they get paid by the promote, what we also call the carried interest. In CPI Capital's case, and this is a question that you do have to ask every time you call a real estate investment firm, hey, by the way, what is your promote? The promote is the...
As soon as you ask that, they're going to scare them right away. They're like, whoa, this investor knows the promote.
Sophisticated. Okay. Or even say, what is your carried interest? They say, okay, this is a very sophisticated investor. But essentially what it is it's the split of profit between the general partner and the limited partner. Okay, so in our case, we do a 70-30 split on the profits made, 70% in the favor of the LPs, 70% in the favor of the investors, and then the general partner takes 30% of the profit made. Okay, so that's on a high level what the promote is, the carried interest. To kind of take it a step further, should I talk about?
Which is also a what is it called? It is a compensation is a, what was that term, the perfect term you used a moment ago? It is a performance-based compensation. So it's important to understand that the deal has to make some money, some profits for then the general partnership and the limited partnership to divide those profits. And if the majority of the profits are made on the back end, then the general partner is going to make sure they find a great deal and bring it to the limited partners. Otherwise, there's going to be no money to split. So it's very important to make that distinguish.
Yeah. And in CPI's case, another thing that you can ask as an investor, and I just wanted to talk about this because I feel like it's a really important thing, a preferred return.
Preferred, let's not, you're going to make it very confusing. Let's just do, so the promote, we talked about it, is the back end profit, is a profit. At the end of the day, that's the most important thing, right? Hey, John, my friend, let's buy this property. I'll build it. You put up the money. We're going to build it. We're going to sell it. And we're going to split the profits. Okay, great. It's a very simple concept. That all that profit comes at the end when the project is built and sold. In our case is when it's renovated and sold. So that's the majority of the profits. But then there are other profits as well made along the way. From the rents collected, there are profits that are made. And the general partnership also makes some fees. And if you'd like to pose that question, Jennifer, I'm more than happy to get into that as well.
Yeah. So do you want me to actually pose the question about your?
I didn't want to ramble on. So
no, I would like to hear about the specific fees, because this is a fun one, because people don't know how necessarily to make money or what ones to, and give us a range. Like, let's get right into it. Sure. Of what a good, what a competitive rate is for an acquisition or an asset management. So go for it.
Absolutely. So now about the fees, let's kind of explain why the fees even exist. So great, the last part makes sense, especially in CPI's case, where 70% of the profits go to the investors, 30% comes to CPI. Great, it all sounds great. But the general partnership found this deal. They vetted the deal. They must have probably vetted and looked at 100 deals before they put one under contract. They put their own money as non-refundable deposit in most cases. They had to make that relationship, take brokers out for lunch. They did all of this work to just find the deal. And then they had to put the corporate structure in place. They have to have securities lawyers and accountants. They had to put all that in place. They had to create this huge brand to then bring in investors to know and like and trust them enough to give them their money. For doing all of that, to get the loan, the debt, of course, great. So there's a lot of stuff that the general partnership is doing. So the general partnership says, hey, I put this whole deal together. I need to keep the lights on. I need to get paid a fee upon closing, which is called, there's multiple fees that are used. You can also assess an investment firm depending on how much fees they charge. Some of them are very fee heavy, and some of them are not, but some of them are like us. We're trying to be very competitive. So our fees are very low. So the acquisition fee is a fee that the general partnership says, hey, upon closing, when we close on this deal, we're going to charge an acquisition fee. In most cases, the standard is 2% of the acquisition price. So the purchase price. So if you're buying something for $100 million, the acquisition fee is $2 million to the general partnership. That allows the general partnership to keep the lights on and move on forward. The next fee that is most times used and taken by the general partnership is the asset management fee. So it's very important not to confuse the asset management fee with the property management fee. So you buy a property, it needs property management. Either you're doing it in-house or you're hiring a third-party property manager, but somebody needs to look after that property manager, make sure they're hitting the numbers, oversee them, make sure that the occupancy is where it's at, make sure the vacancy is low, make sure that the loss to lease is being reduced, making sure that the upkeep is being done right. That is called asset management. So the general partnership charges a fee for asset management. You also have other fees, for example, a construction management fee. If there's deep renovations that are being done and there is a contracting team coming in, the general partnership then charges a management fee to oversee the contracting company coming in. There's also Should I just keep going?
Yeah, you should. What I want to do though is just really unpack the just asset management versus construction are different. You may have a smaller renovation or something like that that might just sort of not in order of magnitude of what projects you're taking on, but potentially if you're considering this in a smaller project, it may not make sense to charge a construction fee in addition to an asset management fee if it's like a lipstick rouge situation.
Absolutely.
Exactly.
Absolutely.
So again, you characterized it well of deep renovation or construction or some major project. I just didn't want individuals to start going, oh, hey, there's another fee I can just start charging. And you characterize asset management fee very well. I just wanted to add the word strategy and financial oversight. So making sure that the strategies that you've been placed in your business proposal and your business plan that your clients, the investors have purchased and bought into, that they're executed by all of the various team members. That's what that asset management is, to summarize it differently. Okay, construction. All right.
We got construction management. We also got the loan guarantor fee. So to be able to get a loan, in most times you need to have a liquidity. You also need to have a net worth. The net worth is usually the total amount of capital you're borrowing from the bank. You need to show the net worth that you have that much net worth. Also liquidity in most cases 10% of the total capital that you're borrowing from the bank. You need to show in some level of liquidity. So there is a fee charge for that. A standard fee is 1% of the loan amount. Now we also got a refinance fee. So you made the property perform so well, you did your value add, now it's worth more. Now you can go to the bank, do a refinance to return some capital or all the investors' capital back to them. And in that case, you charge a refinance fee. You
and
also
how much does a refinance fee typically, what's the going rate on a refinance fee?
Refinance
2%?
About 1.5%.
1.5% approximately, but it sometimes is different. Is also
it's project specific.
It's project specific, and it's sometimes is on the amount of loan received. So these things. So all the numbers that I'm giving you is just industry kind of average.
And that's
so.
what you have to ask
benchmarks.
Even for us, project specific, right? Our fees may change on different projects. And then what are the last fee?
The last fee is the disposition fee. So it's when the project is sold, there's a fee charged on that. So now we mentioned all of these fees. We're a newer company. We want to be aggressive. There's lots of Goliaths in our space that we're trying to be competitive with that charge most of these fees we just mentioned. On our last deal in Houston, Texas, the Park Apartments, we charged
the asset management fee and the acquisition fee.
So those are the only fees we charged.
And we did a 70-30 promote.
70-30 promote. But
yes.
That is why, so that goes to people who want to get into this space.
Yeah. Great.
There are all these fees that the GP can charge, but that doesn't mean that you could charge them, because at the end of the day, there's not going to be enough surplus to your investors. And sometimes you have to compensate because you don't have the long track record. So you need to compensate that with a lower number of fees to make your deal more attractive.
And August actually writes a weekly newsletter, and he wrote an incredible blog on fees that are charged in real estate private equity. So you can find that on our blog as well.
Thank you.
Yeah, no, for sure.
Detailed blog, so you can check that out on our blog on cpicapital.ca.
Yeah, and I think you characterized them really well. Thank you for explaining them. And just so you know, folks, so we do, if we're starting out, if you're putting on your I'm building a real estate private equity firm hat, there's some hustling for sure. And to your point about being newer kid on the block, or maybe with a different asset type or a different model or whatever, you do need to have some things and ways to entice individuals to come with you as you're getting and building your reputation. Something that you mentioned, August, is about like the loan guarantee or the deposit guarantee. I've heard it a couple of different ways. I've also heard it as like the high net worth fee that people can charge if they're the ones who are guaranteeing the mortgage and or providing a down payment, kind of a little bit of that. So question earlier that Tammy was asking was, are your mortgages qualified for in Canada or the US, and or basically how do you get the mortgages? Because that is a question that people, when they're looking at cross-border investments, or rather, whether even if it's a US individual wanting to invest in Canada, we're a cross-border here, we're North America REWL, or if you're Canadian wanting to invest in the US, how does one go about doing that? So I know you're a Canadian firm primarily investing in the US. Tell us how you go about that.
You want me to
go ahead? Yeah, go ahead.
So so at the end of the day, the entity that acquires the asset in the US is a US entity. That is the entity, and the partnership, the general partnership within that entity is who is applying for the loan. So that partnership and the general partnership within that entity need to show their net worth, their liquidity into the deal to be able to get approved for that mortgage. In our case, we utilize something called the key principal. So we bring on an individual that has the liquidity and net worth and the experience that can sign on our loans. So that is something that we've utilized in the past. And it's just like any other contract that you hire. You need liquidity, you need signing on your loan. You can bring in a key principal, and they can assist you with your loan. But yeah, your income in Canada and somewhat on these large multifamily commercial real estate financing deals cannot really be utilized. The US lenders are really looking for US based firms or individuals with the background and a net worth and what have you.
Yeah. And Jennifer, I just wanted to say for the investors that don't do it yourself investors, it's good to ask when a real estate private equity firm talks about returns. We show our returns net of fees. Just wanted to.
Oh, you want to touch on that?
I wanted to touch on that.
Oh yeah, do go ahead.
Because an investor's like, okay, you guys are forecasting these kind of returns. That's great, but now I got to minus all the fees and all this stuff. No, guys, ask the question: are these net of fees and promote? And then you can actually see the true forecasted return. So in CPI Capital's case, we do net.
And if you want to manage or do a syndicated deal yourself, you're creating a deal presentation. That's also, you should think about that. Hey, when I'm presenting this to my investors, do I want to make it look really pretty and have them, have my fees within those numbers, or do I want to do a net of fees and also advertise that to my investors that, hey, all the numbers you see in my deal presentation are net of fees. So it's important.
You want to simplify it as much as you can.
Yes, 100% well said. And when you're putting your pitch decks together or whatever have you, and your business plans and all of your materials, if you're that do-it-yourselfer and wanting to create your own, you will want to definitely do that. Thank you for mentioning that, because you don't want to leave your potential clients having to do math on the spot. No, make it simple. So that's fantastic. So we only have a few more minutes.
1 second, we only have 4 minutes left. So there's a huge component that on our presentation is going to be building the thought leadership and the equity side. We have not talked about that all. Should we just briefly say that?
Well, briefly say what you want to say, but then leave a little bit of it for...
Okay, remember those three pieces of the pie that we talked about?
Yes.
The pie with three pieces. The equity piece is a super important piece.
It's like crazy important. Okay, listen, we can't do anything unless we can raise capital.
Whoever's got the goal makes the rules. Yeah, however that goes.
We always say that internally. Whoever's got the gold makes the rules.
So that we didn't talk much about that, but on our presentation, we're going to go into the details of the route that CPI Capital took to be able to raise millions of dollars and connect with many investors, just showing up to the party when they say, great, we want to build a private equity firm. We want to buy these great US assets in multifamily assets in the US that provide cash flow and appreciation. Where's the money? Okay, fine. We get to 70% from the bank. Well, we still need that 30%. Where is that going to come from? And we're going to go over our presentation into actually
detail of every
very
step
detailed part of it.
So the blood, sweat, and tears, and everything that we had to do, dedicate our lives into how to raise capital, and that's a big portion of it. It is
definitely worth the $499 you're going to be paying for that next event. So make sure. Is that the cost for that next event?
It's not. It's way cheaper than that, actually. And for those of you who are out there and who have not joined us yet, I mean, hey, we've got our free trial, so people will be able to even come and just experience us and experience you, and to learn that on our free trial. And thank you. It's worth $4.99 just for that one episode, if you will.
And it's not some company who started 10 years ago, 20 years ago, and they just make few calls and they raise tens of millions of dollars. Is people who literally put blood, sweat, and tears to connect with investors and build a brand to then be able to raise capital. And
we'll tell you exactly how we built a real estate private equity company from the ground up, and really share and bring lots of value to you next week. So we're excited.
I am so excited, and I know so many of you are. And for those of you who are REWL members and you're missing this particular one, we are coming after you, because I know that there's a ton of you who have been asking for exactly this. So this is your how-to guide on building that real estate private equity firm. And you're going to be learning from two who are just crushing it in that space right now, and who are just and getting started as well. So, you know, having that extra hustle and having that extra energy to go, okay, this is what we need to do in order to be competitive. And I think that timing is perfect. And just to sort of circle back, I also want you next week to share with us some added benefits, as to not benefits, but like, and you've mentioned some of them, but what sets CPI apart? You know, and you've mentioned like lower fees and things like this, and that will also help others go, okay, you know what? I want to do business with these folks, and this is how I'm going to, you know, invest with you because you have such competitive advantages. And or, hey, yo, if you guys are starting something like this, you're going to have to do better than that. So we'll have lots to talk about next week.
Can't wait. That'll be lots of fun.
Awesome. So are there any last minute words that you'd like to say? I want to make sure that we're keeping this on time for our 1 hour total. Anything else you'd like to close out with, Ava and or August?
Yeah, we're really passionate about educating and being thought leaders. So, I mean, by all means, we're just a call away if anybody has any questions for us.
Yeah, I want to thank you and your team
Jennifer.
putting all of this together. You're doing a tremendous job. Your team is fabulous. The experience we've had
Incredible.
with you, that's what we're here, adding value to your audience. We're really looking forward to seeing you grow and flourish.
And I have to say, your marketing is on point. Very nice.
Well, thank you to our Chief Marketing Officer and the whole team, Andres, Fatima. I mean, they're fantastic. So thank you. I really appreciate it, and delighted to collaborate and hang out with you guys in this space. And next Wednesday, same time, same place, we're going to go even further. So thank you again, CPI Capital.
Nice to meet you all. Thank you so much for coming.
And I think that's it. Thank you.